The broadcast is now starting. All attendees are in listen-only mode.
Okay, good afternoon, everyone, and thanks for joining today's webinar, Improving Efficiency in Unclaimed Property Processes. My name is Greg Richards, Director of Marketing for EnableSoft, and the host for today's event. Just a few housekeeping points before we begin. Each of you is in listen-only mode. You can type any questions you have into the chat box on your screen. We'll answer as many of these as we can during the event. Any unanswered questions will be addressed within 48 hours of the webinar's close. And now, without further delay, let's introduce today's topic, Improving Efficiency in Unclaimed Property Processes. We're going to do our best to have you out of here in 30 minutes today, where it's free. Just kidding. But first thing we're going to do is introduce our company, EnableSoft, and talk to you a little bit about what we're about. And then we're going to launch right into the content. We're going to start with situations that generate unclaimed property, some of which you may be aware of, some of which you might not be aware of. We'll talk about your responsibilities under the Uniform Unclaimed Property Act. We'll talk about automating fee assessment and abandoned property reports. Hopefully we'll be able to illustrate that for you with a few case studies. And then to wrap things up, we'll talk a little bit about our product and about automation in general, Foxtrot. And again, hopefully if there's time, we'll be able to include some Q&A here at the very end. So really quick, who is EnableSoft? Well, EnableSoft, based in Orlando, Florida, we are about what's possible today. EnableSoft is an innovator in productivity and efficiency software solutions. We've been doing it for the better part of about 2 decades now. We're a partner to nearly 500 banks and credit unions. Our customers include about 1/3 of the top 1,000 banks and about half of the top 100 performers. But enough about us. Today we're here to talk about unclaimed property, and we're going to start with sort of a very broad definition of unclaimed property before we kind of launch into the content. So when we say unclaimed property, what do we mean? Well, we mean a liability that a company owes, in your case, you, a bank or a credit union, owes to an individual or entity, your customers, when a debt or obligation remains outstanding after a specified period of time. So as we move forward through the presentation today, we'll talk about those specified periods of time by asset. But let's talk about what those assets or to you on your books liabilities might be, just a few examples. So of course the obvious one, DDAs, checking accounts, savings accounts, safety deposit boxes, real estate, and really most real property can be classified as unclaimed property at some point. Credit balances, traveler's checks, credit memos, disposals pursuant to repairman's lien. So you have a customer with, let's say, a vehicle who's had that vehicle repaired and then essentially walked away. That repair shop places a lien on it. If you're responsible for that disposal, you are also responsible for any amounts and proceeds above and beyond what's owed on that, again, in this case, vehicle. That eventually can turn into unclaimed property and would need to be escheated to your state. And we'll talk about that again in a few minutes. Overpayments, miscellaneous accounts receivable, even insurance proceeds, all of these things can be classified eventually as unclaimed property. So part of unclaimed property is the idea of abandonment, right? The idea that somebody has actually walked away from this property. So we've defined unclaimed property. Let's define abandonment. And it's important to know here we've listed 4 factors towards determining if this piece of property, this liability to you, is in fact abandoned. There's probably 7 or 8 that we could have included in here. The important thing to note, though, is that all of these, when taken in aggregate, represent an intent on the part of the customer to relinquish the property, not necessarily a lack of intent to use it. So through a series of actions, or really, to be specific, a series of inactions, this customer is in effect saying to you, the property holder, I intend to relinquish this property through my disuse of that property. The first factor here is customer or the apparent owner has had no written or other communication with you. So what we'll cover in a few minutes here is it's incumbent upon you eventually to reach out to that customer and make an effort to communicate with that customer. But in the meantime, that customer, the apparent owner of that particular piece of property, that asset, has had no written communication or otherwise communication with you in any way. They've conducted no business with you. They have not transacted. They have not been into the branch. They have not necessarily signed online to access their account. They've made no deposits, no withdrawals, so on. They've had no interest or activity with the property. If it's real estate, they've not set foot in the house. They have not accessed their safety deposit box. They've, again, in no way transacted or interacted with you during this period of inactivity. And then they've had no response to your efforts to return the property. So, again, we're going to talk in just a little bit about the efforts you need to make in order to officially claim the property unclaimed and escheat it. But they have made, up until some point, no effort to respond to any of your outbound communications. So the unclaimed property process, you're going to see these slides again, or this slide rather, here in a few minutes, but we can really kind of boil it down into three big silos, I suppose. There's abandoned property identification, so that's actively locating properties by property type or liabilities by property type in your core or among your accounts that are indeed abandoned or at the very least have fallen into disuse over some period of time. There's fee assessment. This is a marginal revenue opportunity. If you choose to assess fees for inactivity or for abandonment, that's another big step here. How will you do that? Once you've identified these properties that have not been accessed and not been used and there's been no communication from this particular customer, for example, will you assess fees, and if so, how will you do it? And then the actual act of escheatment, that is transferring the liability, in your case, to the state. And there's a number of ways we can do that, obviously, but that's sort of the third and final act here, the final piece to this puzzle. And then obviously it's closing out the account. So let's talk quickly about the Uniform Unclaimed Property Act of 1995. This is actually the third iteration of this act. The first one was passed in the early 80s, 1981, I believe. Then there was a revision to this act just a few years later, and then the act that we are currently working off of is the one that was ratified in 1995, the Uniform Unclaimed Property Act. This act is non-binding. It is not a federal law. It is intended merely to be a guideline, a set of barriers or guides to which states can adhere, and by and large, most of the states do adhere more or less to the guidelines set forth in the Uniform Unclaimed Property Act. With so many people on the call today, it would really be impossible for us to sort of break down by individual states the rules that govern abandoned property and escheatment for each of you. So as a general rule, we'll go with the Uniform Unclaimed Property Act. Again, most states adhere more or less to this act, and obviously we would encourage you to check with your individual states before making any decisions on unclaimed or abandoned property. So your obligations, again, under the UUPA of 1995, usually you've got to wait 5 years. 5 years of inactivity and non-communication from the account holder before you can officially claim this property abandoned and then eventually escheat it to the state. So generally it's 5 years. That's going to be DDAs. That's going to be your checking accounts or savings accounts and so on. But there are exceptions. So in the case of traveler's checks, that's 15 years. That's a pretty long time to wait to escheat traveler's checks. Money orders, 7 years. There's other exceptions. In general, though, the closer we get to cash, the longer we need to wait before we can actually declare this property abandoned and then escheat it to the state. You can enforce fees like we talked about in the previous slide, but you can do so only when they are agreed upon and when they are regular. Again, these are guidelines set forth for the individual state. So these fees should be agreed upon. So the account holder, let's say in this case, has agreed that after some period of inactivity a fee will be assessed, and they should be regular. So we're not assessing fees or debiting accounts sporadically. We're doing it every week, every month, every quarter, every year, but there's a regular pattern to it. This last point is probably my favorite in the whole presentation. The fees may not be unconscionable. So it's up to you to determine what unconscionable is, I suppose, but in general that means we're not assessing a $100 a day inactivity fee. We're talking $1 a day, a few dollars a month. We're talking reasonable fees when we're assessing unclaimed property or inactivity fees to these accounts. And your individual states, by the way, will set forth the limits of those fees in most cases. So handling abandoned property continued here just prior to the escheatment process, right? So we've now declared, all right, it's been 3, 4, 5 years, whatever the case may be, and we've had a period of inactivity. We've identified these inactive, abandoned accounts. What do? Well, we're ready to escheat it, but before we do, we have to provide a written notice, not less than 60 days and not more than 120 days before reporting this asset to the, or liability again to us, to the state. So somewhere in between, in the case of, let's say, a checking account, somewhere between 4 years and 8 months and 4 years and 10 months, we need to be able to notify that account holder of our intent to escheat their property, and we need to do that in writing. We need to include details like when the property became demandable, the tax ID, all the pertinent information. And generally here we're talking about any amount in excess of $50 in value after we have deducted any inactivity fees that we've decided to charge. That doesn't mean that below $50 cannot be escheated or transferred to the state, but generally that's a much lower sort of standard of care for amounts below $50. So the actual escheatment process, though, we've now determined that the property is in fact abandoned. We have now notified the account owner, and we've received no response. So that sort of furthers our assumption here that the owner has intended to abandon the property. So we begin the escheatment process. We're usually going to report this asset to the state in which the owner resides. And that's generally pretty easy to figure out. If it's not, however, failing that, we're going to escheat to the state where the transaction arose. And most states are looking at November 1st for all property that became escheatable by June 30th of that year. That's really your deadline. Again, check with your individual states, but those are the guidelines set forth in the UUPA. And that generally holds true for most states. But what if we don't? What if we fail to do this? Or what if we make the conscious decision not to do it, or we just don't have the manpower, the technology, the capabilities, whatever, to accurately and effectively escheat property, abandoned property, to the states? Most states, and I'm going to go on a limb here and say every state, actually assesses fees and interest and penalties for financial institutions that fail to escheat properly. I'm going to use the example of Florida here. We're based in beautiful, sunny Orlando, and we actually carry some pretty steep penalties for failure to escheat. So in Florida, that penalty is up to, again, this is sort of the highest rung of penalties here, up to $5,000 plus 25% of the value of that particular property or asset, plus 12% interest compounded monthly. So as you can imagine, for a home or a luxury vehicle or a high balance account or whatever the case may be, these penalties, and especially the interest part of it, can start to pile up pretty quick if you fail to carry out your obligations and escheat property. States have the right to perform audits for which you may be charged, so at any point your state treasury can likely perform an audit on your financial institution. That's no surprise, for which you can be charged. But my second favorite line in this entire presentation is criminal charges for willful neglect or fraudulent reports. So if you intentionally make a fraudulent or willfully neglect your obligation and your duties under your state's escheatment laws, you can be brought up on criminal charges and subject to some pretty stiff fines. This fine actually that I've laid out for Florida is for the willful neglect of your escheatment responsibilities. So we've identified the abandoned property. We've made an attempt to notify the owner. We've decided to escheat as per our obligation to our state. How do we do that? Well, in general, unclaimed property over $50 can be reported electronically. Here in Florida, that's the case. It's $50 or over. Under $50 in general, you're looking at a paper reporting process. Most states have a web-based filing system. I'm going to go out on yet another limb here and say that every state probably has some form of web-based filing system. Oftentimes, depending on state, that process can be onerous, right? It can require a lot of information on your institution, plus extensive information on the account that's to be escheated. That's important. So we're talking not just the customer's name, but the value, when it became escheatable, the type of asset, tax ID, address, you name it. Pretty extensive information to transfer to the state so they can hold on to that asset. So I told you you'd be seeing kind of a variation of this slide again. These are sort of the three silos of actions or activities that we need to take when we're declaring unclaimed property and when we're escheating property to the state. Abandoned property identification, fee assessment, escheatment. Each of these three are full of manual processes, right? So especially in the case of like abandoned property identification, what do we need? We need some kind of reporting tool to mine our data, mine our accounts to determine which property, what properties, what assets, what liabilities have been dormant for a certain period of time. We need to know by asset type or by liability type what the rules are governing those that abandoned asset. Has it been abandoned? Has it been left untouched for 5 years if it's a DDA? Are they traveler's checks that have been left untouched for 15 years and so on? That can mean a lot of manual searches if you don't have reporting tools, somebody physically looking back into your account records and searching for these accounts on a regular basis. Fee assessment, if you've decided to assess fees for inactivity, how will you do that? Can you reference reports? Will you reference those reports you pulled in step one and then manually go and start assessing these fees moving forward? Chances are your core probably has some sort of functionality that allows you to assess those fees regularly moving forward. If you're making the decision today to start assessing those fees today, how will you go back and retroactively look and assess those fees to accounts that have been inactive for some period of time? Do you have the capability to find those accounts and those that have already been abandoned and dormant to go back and assess fees? And then the actual escheatment, copying and pasting, scraping information from the accounts into an online web form, entering info in most cases, then transferring those remaining funds to the state, and then actually closing the account. Again, in many cases for most cores, some or all of this is likely a manual process, something that you're doing by hand, and that's probably taking quite a bit of time. So how you're doing it now, we kind of hit on that with the first point here, MUP, manual unstructured processes, MUPs. It's doing things by hand, right? That's doing all of these processes by hand. What we risk when we're doing that anytime we introduce the human element is human error. So fat fingering, miskeying, simply not being able to do it for one reason or another. Chances are there's probably multiple manual unstructured processes throughout your organization. But in this case, escheatment is a big one because it needs to be done regularly, and it's something that potentially carries with it some pretty hefty penalties. So this is something that we're doing regularly, and chances are we're doing it by hand. If you're not doing it by hand, another option here might be custom programming. So if you're fortunate enough to have a pretty extensive IT department who can write and create a custom program that can perform these activities for you automatically, that's great. Oftentimes, though, that's a pretty knowledge-intensive process. And what you're left with at the end of the day is a custom program that does one thing one time. So it escheats these properties for you this one time and does nothing else. And then outsourcing. If you decide to, like we talked about, maybe enact some sort of retroactive dormancy fee and go back in your accounts and start assessing fees manually. If you don't have the manpower for that, if you can't write a custom program for that, one option might be outsourcing. Certainly that's a job that your core provider would pick up, or there's any number of third parties that would gladly take that work off your hand, I'm sure. There's a benefit of transfer of risk here, but obviously we're again introducing a human element, and cost is a factor. Alternatively, you utilize our product, the product that we at EnableSoft develop and market, and that's Foxtrot. So Foxtrot is a software, and here's a sort of a screenshot of it, and it moves data within the core and between disparate platforms. So your core and the online escheatment platform for your state, for example. Enters and changes data just like you would in the presentation or the user interface layer, punches the keys and clicks a mouse just like you would. You write scripts that tell Foxtrot how to perform the activities that you need done. So in this example, we've shown a script kind of here in the middle of the window in this portion. You actually create these scripts that instruct Foxtrot how to perform a task, how to perform the fee assessment, the account closure, the escheatment, and then Foxtrot does it for you on top of other tasks automatically when you tell it to do it or at intervals you define. So again, Foxtrot is software, true enough, but it works like a digital employee, right? So it works with all core systems, be they browser-based or green screen/emulator, proactively identifies inactive and abandoned accounts based on criteria that you define for your individual state, assesses or debits fees from accounts automatically, works between the core system and those state websites, like we said, to scrape and transfer information, and again, automate that upload, transfer, and account closure process that's part of Escheatment. So let's recap here the property identification, the fee assessment, and the Escheatment. There's kind of the old way, and there's our way if you should decide to invest in and license Foxtrot. The property identification portion of it, excuse me. Prior to Foxtrot, again, we're manually creating reports to locate accounts, or we're just simply going into our core and locating accounts by type that have been dormant for a certain period of time. We're manually scouring those listings for unclaimed property, and then we're decisioning them by agent type. What kind of property is this? How long has it gone unused? How long has it been abandoned? And then what does our state tell us that we need to do with this? Are we over, under 5 years? Are we close? With Foxtrot, you can write a script to automatically find that unclaimed property for you, again, based on the criteria you define. And then send alerts when it's found. So, hey, alert me anytime an account has been inactive for 5 years or 2 years or 2 hours, whatever the case might be. You can have Foxtrot notify you based on those criteria. Fee assessment. Again, can you even assess retroactive fees? If you make the decision today to enact some inactivity fees, are you able to go back in time? Does your core allow you to go back in time and assess fees retroactively? Odds are there's some functionality in there that lets you do it moving forward. You've got to manually locate these accounts and assess those fees. You've got to notify the account holder one way or another, likely via email, again, manually. Alternatively, Foxtrot can go back and retroactively debit or assess those fees, can make changes to the current account, and then can notify that customer, both noting the account and notifying the customer if you choose via your online platform. And then the actual Escheatment process, manually, before Foxtrot, we're manually accessing the online tool, we're manually copying and pasting data, we're manually reporting and debiting a full amount. There's a theme here, right? These are all manual processes. After Foxtrot, we're having Foxtrot open the website for us, log us in, scrape the information out of the account to be escheated, uploading it to the online platform, pressing submit, then actively transferring those liabilities off of our books and closing that account, or whatever our process happens to be. So I told you we'd like to illustrate some of the functionality and the process automation here with a few case studies. We said that at the beginning. The first one here is a customer of ours. It's a $1.3 billion Northeast bank. And what we're seeing with them is they're automating really the entire Escheatment process, right, from A to Z. They are faced, I guess, still today with onerous state rules and challenges with their core system. So their particular state requires very, very thorough, very complicated reporting for Escheatment. Lots of information required, lots of copying and pasting. And then challenges with their core system does not necessarily allow them to easily identify or to escheat property, get it off their books without, again, some pretty countless manual efforts. With Foxtrot, and I should add too, part of this came about as a result of their decision to begin assessing a $50 inactivity fee every year per account, right? So if you don't use your account for a year, we assess a $50 fee to actually pull that amount out of the account, and they started doing that, and that's kind of what sparked this project here. After Foxtrot, the Foxtrot solution, Foxtrot obviously goes in and automatically debits that fee from the account or assesses that $50 fee, makes a decision on accounts of less than $50. So at $50.01, go ahead and assess that fee. At less than $50, pass on that account, but mark it and notify me and let me know how many we come up with. Scrapes account data, Foxtrot does, and uploads it to the state reporting site. And again, we're talking about a fairly complex multi-page reporting process that Foxtrot automates. Closes the account. In turn, it saved this particular bank several days each time they want to close and escheat one of these properties. And again, this is an annual process, and it saved them probably a week or more in manual effort, plus the ease of assessing these fees for every single account. It's been a real revenue generator for them. Another customer, a $1.5 billion Midwest bank, they're really automating the dormancy fee assessment portion of it. In May of 2012, they began assessing a $1 monthly dormancy fee to inactive accounts. Their core, like we talked about, was unable to retroactively apply fees to accounts that had already been dormant for some period of time. One option was obviously to pull a list of accounts and then apply fees manually, have somebody sitting at a computer, or two somebodies maybe sitting at a computer, manually assessing and applying those fees to inactive accounts. With Foxtrot, however, they still went ahead and pulled that list, about 5,000 dormant accounts. Then they wrote a script to go back and apply those fees to each of those dormant accounts. So we're talking about $1 per month of inactivity per account. This particular bank generated $10,000 in revenue within 2 months with almost with little manual effort. Really, obviously, they had to write the script. And that's atop of a few other things, obviously, that Foxtrot is doing for them inside of their organization, and the time savings of a week or two that we see in this example versus having somebody sit at a computer and manually key in the fees. So Foxtrot is a great unclaimed property and escheatment solution, but it's more than that as well. Foxtrot automates just about anything you do in your organization, in your financial institution, with a mouse and a keyboard. So debit and credit card issuance, Foxtrot works between your core and your card issuance platform to essentially automate that process, scraping the customer data from the core, pasting it into your card application, pressing submit. Breach recovery, we have a customer in California who had 20,000 cards compromised in the Target breach of December of last year. They utilized Foxtrot, number one, to lower spending limits, then to automatically cancel all the compromised cards that were contained in the CAMS alert they received, and then reissue those cards. It was an entire process, breach recovery automated, and probably saved them about 2 weeks of manual data entry time. Plus, of course, they were able to get cards into their customers' hands much faster. Applying interest and bonus payments, loan origination, much in the same way that Foxtrot works between a core and a card issuance platform. It also works between a core and an LOS to simplify that process. Officer interest rate product changes, data conversions. If you're acquiring a branch or a bank and you need to automate or you need to convert that data and format that data to get into your core, that's something that Foxtrot can automate and does very well. Changing overdraft protection, limit codes, sweep fees. Again, anything you're doing now with a mouse and a keyboard, or you have people doing with a mouse and a keyboard, Foxtrot automates. So at this time, I would like to open up, we do have a few minutes, I would like to open it up to some questions. If there are any questions out there regarding the escheatment process, we'll do our best, or unclaimed property, we'll certainly do our best. Questions regarding Foxtrot, anything that you've heard today, please feel free to send it in. We do have one question here. Can Foxtrot scripts be run on different computers with different screen resolutions? The simple answer there is yes. Foxtrot is if you've got, I suppose, your core application on one screen and your escheatment application on the other. Foxtrot is screen resolution agnostic, so it's object-oriented, not position-oriented. If you're using something like a macro, for example, anytime the position of an object on the screen changes, that puts the macro at risk. It's no longer able to identify things like buttons and fields. Foxtrot works specifically with those buttons and fields. So no matter how you change the orientation of objects on the screen, Foxtrot will always find those particular objects. It'll always put the first name in the first name field, the state in the state field, the account in the account field. It'll always press submit regardless of where the button is, so on and so forth. So really, yes. The simple answer is Foxtrot can run on different computers with different screen resolution. If we mail a statement to the customer and it does not get returned undeliverable, I'm assuming, forgive me, I'm assuming that means it gets returned undeliverable. Does that qualify as contact with the customer? No. No. Again, check with your individual states, but under the Uniform Unclaimed Property Act, no, that is not going to be a point of contact. Is it considered unclaimed property if there has been no activity in 3 years and the account has a valid address? That is an excellent question. That's probably one you'd have to check with your state treasurer about. Really, it would depend on the property type. If there's been no account activity in 3 years, again, if it's a DDA, usually the standard there is 5 years. If it's real property, we're usually looking at 1 to 2. So it's really going to depend on the type of property in order to make that decision. We've got a Foxtrot question here. Can Foxtrot be scheduled to run at certain times? Yes. So if you're currently assessing fees on a regular basis, if it's every day, every week, every month, or you're running your escheatment process is every year, or whatever the case may be, in addition to all the other scripts that Foxtrot is running, you can schedule it to run at certain times, whenever you choose, or when something happens, right? So when an account on the day of its 5th year of inactivity, we can notify you, for example, that this account has been inactive for this long, or whatever the case may be. Foxtrot can run at a specific time interval when you tell it to run, or when something happens, like when a file is uploaded to an FTP site, for example. Okay, we have a few more questions in here. We're likely going to have to, due to time constraints, we'll probably have to answer the rest of these online, or offline rather, via email. But thank you for the questions. 3 next steps here, just to quickly wrap things up. 3 things we'd ask of you here moving forward. First step here is to contact EnableSoft, see Foxtrot for yourself. Obviously, we didn't demo the software today. We wanted to keep it short and sweet. We would like the opportunity to demonstrate the software for you in person so you can see how it works. So certainly contact us, and we'll provide the contact information here on the next couple of slides. Download this presentation. We'll send it to you. It's on its way via email. And then share this information, operations, IT, lending,